To discuss, I'm joined by the CEO of the Johannesburg Stock Exchange, Leila Fourie. Ms. Fourie, thank you for being with us. Are you happy with the results?
Hi, Francis. Yes, indeed, we are very happy with the results, particularly because our operating profit is flat on last year. And last year was a very big year for us. We were up 19%. We've shown an increase in revenue. We've shown cost control. Most importantly, and particularly during uncertain times, we've demonstrated a high ability to deliver cash. And that's translated into an increase in our ordinary dividend of 4% and a special dividend on top of that. So we are now pivoting towards accelerating our growth strategy.
All right, headline earnings per share, though, down. That was affected by interest rates. Just explain that link there.
So our headline earnings per share were down as a result of our interest income. Interest is at a record low, and so that is something that is out of our control, but an important contributor to our bottom line.
You say that this shows your investment in technology is paying off, the general good news in these results. Skills are scarce in your sector, of course. The JSE has been using technology, and we often talk about the JSE when it comes to South Africa's competitive edge. Financial markets were up there in those global competitive reports. Where would you place the JSE right now, benchmarking it against markets from around the world? How do you think you're performing?
The JSE is performing particularly well. We've demonstrated strong resilience, not only in our underlying technology, but also in our markets. In fact, today we hit an all-time high of 77,000 on our all-share index, and that outperformed all of the developed world markets. Even year to date, our top 40 is up almost 4%. And if we compare how that rates against, for example, the S&P, they are down 8.2%. The NASDAQ is down 12%. So the JSE is outperforming, and it's performing particularly well relative to its emerging market peers. The geopolitical situation in Russia has created a relative interest in South Africa from international investors.
Okay, so that's interesting. I think last time we were talking, you were noticing the outflows of foreign investors. You often do give that warning. And that's also about South Africa, how we are seen in the world. Now you're saying there's some interest. Of course, we've seen the JSE doing well. Just tell us what you've seen. Let's go back to COVID-19. And despite all of the troubles, the markets were doing well, and incredible movement either way, buying and selling. Then we saw the unrest in July last year. What happened then, and what are you seeing now?
Francis, we've seen a tremendous uptick in our markets. Last year, the all-share ended 24% up, and that was in comparison to the emerging market index, our emerging market peers, who ended 14% up. If we look at the flows inbound into the economy, over the past couple of years, we have seen a downtrend in equity market flows. However, over the last 2 months, we've seen a remarkable pickup. Year to date, we've seen 7 billion rands net flowing into the equity market, and the bond market, which is often the canary down the mine, shows 30 billion rand positive inflows year to date. Now, a large part of that is very much a function of Russia's displacement as an alternative emerging market investment destination. This has increased the relative interest in South Africa, and to the extent that Russia gets removed from those emerging market indices, which is under discussion right now, South Africa will be a net winner and will start to look very attractive to international investors.
So this is fascinating. Let's end with this, but just some further explanation, please, because we often talk about South Africa being lumped with other emerging markets when the Turkish lira goes down, the rand goes down, and we're often aligned. We're seen as, well, the rand is quite liquid liquid because it's seen as a test of emerging markets, how they're performing. So you're saying we can actually decouple from Russia, not be put in the same bag, even though Russia is going through turmoil?
Francis, indeed, while the global market right now is what we call risk off and less favouring emerging markets less, in terms of how South Africa compares to all of the emerging markets, and particularly by that I mean Russia, Turkey, you mentioned the Turkish lira, Brazil because of the elections. South Africa is looking increasingly favourable. And what's particularly good about that from a macroeconomic perspective is that the high commodity prices that we've seen in response to the Russia crisis will lead to a positive trade balance in South Africa, and it'll also increase our resource-related tax windfall that the fiscus has benefited from over the last 18 months. So South Africa, now is the time for South Africa to step forward boldly and to put itself forward as a positive yield-producing emerging market, which on a relative basis is not unstable and is not going through the kind of volatility that some of our other BRICS peers are experiencing.
All right, wow. So don't waste a good global crisis. Thank you for that insight. That was the CEO of the Johannesburg Stock Exchange, Leila Fourie.